In this video, I want to talk to you about time and price, a very simple concept from ICT, but people seem to overcomplicate. Why? Because they want to keep you hooked. And in this video, I'm going to simplify time and price by ICT. This concept is extremely important if you want to become a profitable ICT trader or just a profitable trader in general. The reason for this is because it is going to limit you on when you should be trading. And that is what you want when you are trading. You want to enter when there's volatility and when the likelihood of the market going to your take profit is higher than normal. This is going to increase your risk to reward. This is going to increase your strike rate. This is going to decrease the level of headache that you are going to have in the markets and increase the likelihood of you becoming a profitable trader. So if that is what you want, then let's go into the charts and let's break it down. And before we do, check the first link in the description, as the waitlist for the Simple Trading Edge is now open, where we simplify trading a lot and where a lot of people have already found their consistency after overcomplicating the markets. But now, time and price by ICT. So at first, this is going to be focused on FX, but there is also a futures one a little bit further down the line. But time and price is very, very simple. Just from what the name says, it's divided between time and price. But what does this mean? A lot of people think that this is a whole riddle and etc., but not really. It's just focus on executing at the right time. That's all you have to do, right? Because how many times have you been in a trade where you enter, everything seems to be perfect, but then you get tagged out and the market moves in your direction? Well, that is what the concept of time and price is here to solve. So time limits you on when you should be trading, and price limits you on where you should be trading, right? So time is divided into two sections, the kill zones and news. But first, before we go into kill zones, we need to know what days we should trade. And the days we shouldn't be trading are no news days, which means when you go on Forex Factory, you will either see a couple of days where you have news events, which is red folder news on the USD, days where it's a bank holiday, or days where you don't have anything that is a red folder event on USD. Now, why is news important? Well, because the market at the end of the day is very much driven through news. That's where volatility kicks into the market. If the big players don't know what is going to happen in the market, then they will not position themselves in the market. And because of that, there is going to be no volatility. So when there are no news, there should be no trades. Then on CPI, FOMC, and NFP, there's no trading before the news. And I will explain to you why. And this is going to be very, very important. And one of the things that you will notice is that during these days of CPI, FOMC, and NFP, the market is going to range a lot until it then has the news catalysts and decides to move in one direction, or even manipulate everyone out and move in the other direction. Why is it that on the days of CPI, FOMC, and NFP, the market doesn't move? Or why is it that the market one day before and on the day doesn't move? Well, it's because CPI, FOMC, and NFP, they impact the economy a lot. And that means that a very big miss is going to move the market a lot. And because you can't really predict, you can forecast, but you can't predict what CPI, FOMC, and NFP are going to do, the big dogs, the banks, the institutions, they stay out. They don't trade the market until there is the news release. And that is where you see the big moves. Because now that everything is out of the way, we've seen that CPI is according to what we were expecting. Okay, that means that the market is moving in this direction. So by avoiding to trade before CPI, FOMC, and NFP, you will avoid a lot of range-bound price action. The same thing with when there's no news, don't trade. These are very black and white rules for you to follow. So that is on the news. But then that is for you to decide what days to trade, right? But let's say that there is news. We are on a day where this Thursday, 27th of June, we have final GDP, unemployment claims, and pending home sales. 3 high impact news. So none of these apply So we can go on to the next one because this is a yes, we can trade, a green light for us to trade. And that is where time gives us the kill zones, because this will perfectly tie in with price very, very soon. And I think if you have never seen this concept applied, this is going to blow your mind and this is going to help your trading so much. So kill zones are basically when the algorithm is working. That means that during these time windows, there is more volatility in the market. And what makes a trade go in your direction or against you? Well, the opposite of a range-bound market, it's volatility. So if you have news on the day, so now you wait for the market to be in the time window for you to trade. That can be the Asia kill zone, which is from 8 p.m. EST to 10 p.m. EST. You have London kill zone, which is 2 a.m. Eastern Standard Time to 5 a.m. Eastern Standard Time. Then you have New York kill zone that is from 7 a.m. Eastern Standard Time into 9 a.m. Eastern Standard Time. And then last but not least, I have this in smaller because I don't use this a lot. You also have London close kill zone where you do have a little bit more volatility, which is from 10 a.m. Eastern Standard Time until 12 p.m. Eastern Standard Time. Now, these are not just some random times. These are times where there's more volatility in the market, which means a higher likelihood of the market moving in your desired direction because there's more transactions being made. And it's very important that you stick to these kill zones. Now, let's look at price, because now we know time, we know when to execute. Now we have to understand how the market moves through price for you to know when to execute. So with price, you've probably already heard the term AMD. That means accumulation, manipulation, and distribution. But what is this? Well, this is a very simple way to explain how the market moves in terms of price. Because the reality is, not everyone makes money in the markets, and a lot of people will lose in the markets. And what I mean by this is that the goal for price is to accumulate. This is going to make sure that everyone is putting their orders inside of this range. Then it's going to manipulate. So everyone that longed this range put their stop loss below this low. Now everyone is tagged out right there. And then we have the distribution where the market moves where it wants to move. But you will notice that this happens everywhere. It happens on the daily, it happens on a session, it happens on the 1 hour, it happens everywhere. But let's keep this very, very simple. Accumulation, manipulation, and distribution is simply a way for you to see how the market moves. Because like this, you will notice if you go through your past trades, most of the time you were part of the accumulation and you were part of the people that were manipulated before the market moved in your direction. And that is why the kill zones are extremely important to incorporate, because these put these two together. So normally, by the way, this is for FX, the accumulation is done during Asia. Then London session in Frankfurt, they are the manipulation that then allow the market to move in our direction. So what does this allow us to do right now? Well, we don't enter while there is no manipulation. So let's see that on the charts. We have here a very, very clean trade that I entered on the 13th of June. So we had the daily open, right? So as soon as the daily opens, I'm already looking for accumulation, manipulation, and distribution. Accumulation is all of this. Manipulation is when the market moves up and sweeps everyone out. So everyone that shorted during this accumulation has now their stops above here, which is what a lot of traders regard as liquidity. And then the real move actually happens. And notice where I entered. I entered after the manipulation. But now, how do we apply time? How did I apply time? Well, let's look at when London session opened. So 2 a.m. EST is right here. And if we draw a line right there, we can see that London opened, it accumulated, and then it moved up. So everyone that during London session started shorting the market because they thought this is it, this is the time the market is going to go, they all have their stop losses above here. So not only does everyone that traded London session have their stops above this, but also everyone that shorted London Open. And what does the market do? Well, the market moves to the upside, manipulates everyone out, and then what do? Very simple. I wait for confirmation of my direction, which is this market shift, this displacement here. I enter at the 50% of this order block, and then the market moves in my direction and it goes to TP for 2.62R. So notice how I waited for everything. I waited for time to align and I waited for price to align. I wanted to see manipulation, which I did, and I wanted to take part of the distribution, and that is time and price. So how can this help you? And by the way, accumulation, manipulation, and distribution is applicable on the daily, but is also applicable on the session. Because notice how even London session had accumulation, manipulation, distribution, right? This happened all during London session. And then if you check the daily, the same thing happened. Well, if you check New York session, the exact same thing happened. So we have 7 a.m., New York Open, the market moves up, manipulates everyone out, everyone that shorted New York is now in a loss, and then the market moves in our direction and pretty much taps everything we wanted to target. So this is a very, very simple way of seeing time and price. And if you want this framework, then make sure to check the second link in the description. You can download this all for free, no strings attached. You don't have to pay. So check the link in the description. You can see all of this for free. But let me just show you the exact same, but for indices, because I know that some of you like to trade futures. So everything is the same. Just the kill zones are different because you have London session, which is from 2 a.m. to 5 a.m. Eastern Standard Time. Then you have the AM session, which is from 8:30 a.m. to 12 p.m. Eastern Standard Time. And PM session, which is from 1 p.m. into 4:30 p.m. EST. Because in between this is lunch hour and the market opens at 9:30 a.m. EST. And that is how you can apply time and price to indices and FX. Basically, what you have to do, wait for the right time to trade, the right day to trade, and the right time of the day to trade, which means session. And then price is where you will find your strategy. Price is where you are going to wait for everyone to be manipulated out of the market, and you will then enter in line with where you think the market is going to go after the manipulation. So I hope you guys enjoyed. Let me know in the comment section your favorite takeaway of this video, and I will give away a challenge account for the best comment. And you have to comment with this emoji, by the way. And if you're still watching and you are interested in learning more from me, not only time and price, but also a strategy and how to apply this strategy, then make sure to check the first link in the description. The waitlist is now open for the Simple Trading Edge. So I hope you guys enjoyed, and I will see you in the next video. Peace.